Welcome back. Let's talk commodities. Manisha is now joining in. Manisha, for so many days, the movement, the action in commodities overshadowed equities. But I guess we can say not today. But what's happening in your world?
Oh, well, absolutely. Today, absolutely not today. But you know what is happening in commodities as well is after that very, very sharp declines that we've seen in the last couple of sessions, we are looking at commodities coming back as well. So whether it is about precious metals, base metals, energy, all of that is trading in the positive. Not so for the crude oil prices. Well, yesterday was a more than 4% of a decline, which is the biggest decline in 6 months that we've seen come in for the crude oil prices. And after that decline as well, 66 is just about holding on the screen. So 4% of a decline in the overnight markets, but it is still trading 8% in positive for 2026 so far right now. Well, a couple of things to watch out for. One is that the US and Iran conversations have resumed. There are positive statements coming in from both sides, and there is an expectation that US and Iran could continue dialogue starting this Friday itself. The second is about the dollar index, where we have seen that one gain up to a one-week highs. Not so good for many of these dollar-denominated commodities, and is the reason the prices are in check. The third thing is about the OPEC meeting. Well, that has come and gone and nothing has been said. OPEC says that for the month of March, for this quarter, they are not going to be increasing production. Remember, in the last year, from April until December, OPEC did bring in nearly 2.9 million barrels per day back into the market, which is 3% of the global demand. Most importantly, though, is the U.S. lowering tariffs on India from 50 to 18%. And, of course, that has been done. One of the reasons there is, or one of the clauses there is, that India will stop buying the Russian oil. Well, India will have to buy more oil from U.S. and even Venezuela, for that matter. And the numbers do show that India has bought more from U.S. and Venezuela for the month of January there. Take a look at the Russian share, really. In FY20, it was 3% of India's imports. By FY25, we saw that number increase to almost 35%. Now, that really has been a concern. But when you look at the overall numbers as well, it has been going down in last few months. There is a report put forth by Reuters which says the highest that India imported from Russia stood at around 2 million barrels per day. That declined to an 11-month lows of around 1.3 million barrels per day in the month of December there. January is expected at 1.2 million barrels per day, and what has already been contracted will perhaps continue to come till the month of March. It could be 1 million barrels per day in the month of Feb, and by March is expected to decline to 0.8. But the thing also is that India oil purchase, Russia, of course, India buys nearly from 41 countries at this point in time, and the OPEC share of India is at 11-month highs right now. Now, markets do believe that as India shifts to other countries, the discounted oil benefit that India has had perhaps will go out, because the Russian oil was cheaper by $5, even $10 at some point in time. Now, India will have to buy at world prices with higher shipping costs, insurance, freight rates, etc., and that will take the prices on the higher side. There's a report from SBI which estimates that Russian oil imports going out and India coming into the markets now will mean that our bill for fuel imports is going to go up for the next fiscal.
All right. Thanks very much, Manisha, for that. Commodities there in focus.